What's up, guys? This is Justin here. So if you're watching this video, you probably saw my ad where I was talking about how my returns that I get on my real estate investments are vastly superior than Robert Kiyosaki, Grant Cardone, and Stephan combined. And I think the reason for that is my strategy is completely different. See, most real estate investors put down 20% on a property, which is completely fine. There's some advantages to doing that, but I don't. Instead, I actually put down 5%. Which means the return per dollar that is actually parked or tied up is exponentially higher. And then I actually end up getting like basically double the rent. And that is how I'm able to accomplish this. So why can I get a 300% return on my capital every single year instead of like 10%? So I just recently did this and I sold the property that this case study is all about. So 2 years ago, I parked $18,000 on a $365,000 house. It's a 5-bedroom house and I rented out 4 bedrooms. So follow me, this is crazy. So there's an $18,000 seed investment, basically inserted into the investment that I will get back when I sell, or I can just leave it in there. And that $18,000 is reproducing $36,000 per year in rental income because I rent out 4 bedrooms at $750. That's $3,000 a year times 12. So that $18,000 is generating $36,000 a year in completely liquid, automatic passive income. Now I get to live for free as well. After you look at the interest that is tax deductible from the mortgage, I'm saving a lot of money on taxes as well. It's like at least a $5,000 or $6,000 per year interest deduction, which saves me, again, a ton of money on taxes. And then the next thing is principal payoff. I'm getting like $500 a month going to my principal, is paying off the house. I'm also getting $6,000 from that. So $36,000 liquid cash, $6,000 principal payoff, a $5,000 or higher tax deduction, which is awesome, just saves me money. And then we get into appreciation. So the house went up vastly in value, but even if it had not gone up vastly in value, I still would have been getting easily 300%, a 300% return, like minimum. So 18,000 times 3 is like just over 45,000. It's like between 45 and 50,000 in that range ish. I'm off maybe by a couple $1,000s. But if you park $18,000 and you're reproducing $36,000 in automatic passive income, you're already doubling your money on something where you didn't lose the deposit. It's like you're depositing $18,000 you can get back, and that $18,000 is literally. It's like you're depositing $18,000 into something, and you can literally, which is doubling your money, you can literally get it back. It's nuts. It's crazy. So the reason why this is like an extreme asymmetric return is I'm tying up, like I'm locking up or tying up almost no money to reproduce $36,000 per year in rental income and getting these insane. So if we look at appreciation for a second, the house went up in value. I bought it basically $360 if you round up, and I sold it for $565. So you can see right here, I don't know if you'll be able to see this because of the autofocus, but like 100, I'll try to zoom in. I got a basically $85,000 check. It's actually, if you round up, it was 186 because I got some extra money back from escrow. So I basically made $186,000 over the course of 2 years. And this was obviously because the real estate market went up. However, that was after, and plus that is not taxable income because this is my primary residence and I lived here for like 28 months. So if you do the math on this entire thing, even if I didn't already have a successful business, which I already do, like outside of this basically setup, I would have basically made, like, if you take 186 and divide it by 2, it's like 90 grand plus a year, tax-free money, automatic, no maintenance. And what's great is you can scale this strategy. So every 12 months, you can put 5% down on a new property and just accumulate houses and rent out all the rooms. And if I rented out the room here, my monthly cash flow would be like $1,200 per month in cash flow from one place, okay? And then I would just go into another basically property, put another 5% down, and just rent out all the rooms again and just regenerate and recreate like these insane returns over and over. And then once you have 3 or 4 of these properties, all you have to do is a cash out refinance. Like once the 5% down, it could take 2 or 3 years from appreciation and principal payoff, maybe longer, but I highly doubt it given today's market conditions. Before that, 5% goes up to 20%. When the 20% goes up to like 25 or 30%, again, which could be like a couple of years after you buy these houses, Like you can do a cash out refinance on any of the houses that you want for like every 12 to 24 months. And if you have like 3 houses and like each is appreciating at 6% per year, and I buy houses that are really expensive, like 600 grand, stuff like that, that is 36 grand a year of appreciation. And every 2 years, it should go up in value 72K. So if I had a couple of those and I did a cash out refinance like every 12 months, I could literally potentially take out between $50,000 and $200,000 in cash, which is tax-free money. It's not income, it's debt, but it's untaxable cash out that I can use to live on and also do whatever I want. Like I have unlimited financial freedom, obviously, not just because I cashed a $186,000 tax-free check, but before that, I've had financial freedom for like the last 10 years. I just turned 30 this year. I've had pretty much financial freedom since I was 19 because I've been a pretty successful business owner, basically running an ad agency and doing consulting and stuff like that, and doing coaching, all kinds of cool stuff outside of real estate as well. But this strategy is incredible. If you think about putting 20% down on like a $500,000 house, that's 100 grand you've tied up. And then you're gonna get a minuscule rent by renting out to a family or something. And you're probably gonna get like between a 6% annual return to 10%. And it's just crazy. Like I've looked at other strategies. I've looked like Brandon Turner's strategy, the Bigger Pockets guy, who like just is suggesting to collect experience and get like $100 a month cash flow. I'm looking at that going, why would I do that? It's like such, no offense, I really love that guy's content, and I bought his books and I've read through some of them, but like I'm like, when I'm doing this, like I want to park like at my next house I'm about to buy. I had the new owner of this house rent it back to me for a couple months, and the next house I'm about to buy, and I live in Arizona, by the way, this house was in Mesa. I'm about to move to Gilbert probably, which is right outside Phoenix area actually. So on the next house I'm about to buy, it's probably gonna be a $600,000 house. I'm probably gonna put down 5%, which is 30 grand, because the jumbo loan sizes have gone up this year for 2022. So I would have been willing to put down 50K or more to get, under 540 borrowing, but I can borrow 570, and then I can bring my current like roommates with me, and then just basically have that same setup. And I'm gonna, at this time, instead of selling the next house I'm gonna buy, my intention is just to keep it at this point indefinitely, and just literally do a cash out refinance after the LTV goes under 80%, which could take a couple of years unless but it's crazy because you not only have a free place to live, like you have unlimited financial freedom, and you also, the house makes you so much money, it's stupid. Compare these returns. Like if you put 18 grand in the stock market, you're gonna get maybe between 8 to 12%. If you put 18 grand into this strategy and you rent out the rooms like I'm telling you, like I got 1,000%. Like $18,000 turned into $186,000 in just over 2 years. And this was not accidental. I planned this, like this was a plan. I heard a story like 3 years ago of someone I was dating at the time had friends who like bought a house in Virginia, and they bought it for like 172, and they lived in it for like 9 years, and they sold it for like 450 or something. And they collected probably like 300 grand tax free because they're a married couple. And I was like, dude, because I had made like millions of dollars in my businesses at this point, but I've been giving the government 43% of my money. And I'm like, I was never good at saving money, like at all. Like I barely have, like I'd be still almost living paycheck to paycheck, making multi-six figures a year in profit after. And again, that's ridiculous. I could have been a lot more frugal. I was living in penthouses that were like, $4,500 a month, like after utilities and stuff. And I did that for a while, but at the end of the day, like what I'm trying to communicate to you here is this strategy is incredible. And it's not, I want to emphasize something, like it is not difficult to do this. I don't see why, like if your liquid income is extremely high, which for most people it's not, and this video is probably not for you. If your liquid income is extremely high, then just do the 20% down if you want and get lower returns. Like the only compromise is, you have to live with other people for 12 months at a time. But if you want to, like for the first 12 months you can live with people, buy the next house, wait like 11 months, rent everything out, live with people for 1 month, and then like buy the next house and do it again. Like if you have enough houses in a certain area, like take Phoenix or Austin, Texas, or Phoenix, Arizona, Austin, Texas, or these other places where real estate markets are like really solid and they're like really good and they're growing still. Like if you collect enough of these single family houses, like the appreciation alone, the principal payoff alone could allow you to net a 12 to 24 month cash out refinance, tax-free out that can literally, you can live off of like your whole life. Like Grant Cardone said one time, like, I don't want income, I want debt. And what he meant was I want good debt, because the more good debt you have, the more assets you have, as long as the cash flow is covering all the expenses, and as long as like the cash in is covering the cash out, you could say, the appreciation plus cash out refinances, you could literally live off that the rest of your life, depending on how big the stuff is. And you don't have to do that, but I'm just saying this is like the easiest way on earth to get financial freedom. I've done it the hard way. Like since I was 19, I started an affiliate marketing business. I ran like ads on Google and Bing for like lawyers and stuff like that. And then I went into like doing email marketing stuff for all different types of niches and stuff like that. Like I've tried a lot of business ideas and I failed a lot, and I had some successes luckily, and I made a lot of money. But that was a million times harder than just like buying real estate assets to make money off of appreciation, and just having automatic cash flow, like renting it out and living in it or whatnot, is so much easier. Like it takes almost no effort. And like, I don't know what the objections to this strategy could be. You know what I mean? So yeah, why would you put down 20% when you can put down 5%? Or if you're a veteran, you could put down 0%. But to stay focused, and if you some people qualify for the FHA loans that are 3.5%, I don't think I do. I think my liquid income is too high. But like I can do the 5%. Like there's no downsides really. Like I don't know why you'd want to tie up 20% on a home when you can use that money for a rainy day or for a business, or just a lot of other different applications. So I hope you got some value out of this video. I have created other videos in the past that broke down the case study of this entire house. As of shooting this video, I recently took those down because I wanted to redo them, because they were like really long and I wanted to kind of improve them. But I did have like a 5 video series of how this whole case study, I'm going to use that material to probably create like a playlist or series if you want to see the whole case study of how I did everything with this house. And if you have any questions about this strategy, just let me know. But if you're interested in entrepreneurship, finance, investing, this is the channel for you. My name is Justin Spencer. I hope you got some value out of this video. I look forward to getting to know you more, and I'll look at your comments below. Definitely leave some comments and your thoughts, and give me a thumbs up, please, if you like this video, and feel free to subscribe. I'm going to start producing lots of new videos every week. I'm going to start just focusing on YouTube full time. All right, I'll see you on the next video. Bye-bye.